For those of you who were at the regulator update last night, you would have heard Ross Jones talk about the prudential standards in a more holistic way, and he commented that APRA expect trustees to be ready for the 1st of July 2013 implementation date in order to be able to adequately demonstrate to APRA and others that they can comply with all of the prudential standards. So what we're doing today in our session is really just talking about one component of that, which is the data reporting standards. And in my session, I'll talk a little bit about the context of what those now look like, or what we're expecting, and also what I think the trustees' responsibilities and some of the audit responsibilities, what they may look like as well. So first, to go back a little bit, many of you will know that the draft reporting standards came out in September last year, and since then there's been an update in terms of a roundtable discussion in January and February that APRA have held with quite a number of organisations, from custodians to administrators to auditors, and through that discussion, there has been, I think, a lot of information provided to APRA that they are really taking on board, and from what I've heard so far, I think we will get something a lot more practical from APRA soon than what was originally proposed. Just as a matter of interest, I think Ross also said last night that the information or the final reporting standards are due out next Thursday, so 1 week from today. So in the information that's coming out next, we will get a lot more clarification around the look-through provisions, so the investment look-through provisions, and also the portfolio holding disclosures requirements, and that's certainly something that ASIC are pushing for. We are expecting that since the September information that the requirements will be a lot more watered down, and so there'll be a lot less information required. There will be some duplication in the forms removed, and also some of the forms in the first year will be deferred out into the following year rather than all being required in the first year. We also met as an audit profession with APRA as well, and through the Audit Standards Board, and I believe that they have also listened to, APRA have also listened to that commentary and have reduced the audit requirements in line with the comments provided by the audit profession. So what are we expecting? Well, in September, there were, what was tabled was some 31 forms that would be required to be lodged each year with APRA. We're expecting that'll be pared back in terms of the way it's delivered, but the total number will actually go up to 38 forms in total. In fact, I'm talking to some people just last night that are very close to where APRA might land, and in fact it could be a lot more than that. The main reason for that is I understand that some of the information will be divided out into information that will be required for statistical purposes versus information that will be required for prudential purposes. So watch the space on that one. You could have quite a number of forms, more than the 38. But going off the information that was provided in January and February, there will be a number of forms that will be required on an annual basis. So there's 25 there and 13 on a quarterly basis. And in terms of the 1st of July 2013 year, there will be, I think, some 22 forms, and you can see the areas that those will cover there, including MySuper, investment performance, and operational risk financial requirements, to name just a few. I thought I'd put this timeline up just to give you a feel for the first year. So in the first year, the point of the slide is just to show that there will actually be 2 reporting regimes running. So for 30 June 2013 year ends, you will need to put an APRA return in and lodge that by the 31st of October, and that's like normal. But you will also have the new regime running from the 1st of July, and your first quarterly information, which is to the quarter of 30 September, will be due 28 days after that quarter. So that's expected to be required on the 28th of October. So two regimes running there. Then moving forward from that to the 2014 year, you can see from that timeline the quarterly information required. In addition, Louise mentioned the portfolio holding requirement. Now that we think will be required every half year So 31 December information will be required within 90 days to be included on the website. I'm not sure exactly where that's going to end up at this point, but that's what we're expecting from the information provided to date. And then again at year end, portfolio holding information and also all of the quarterly returns and the APRA return. In fact, the APRA return for the following year we're expecting will be required within 3 months of year end instead of the current 4 months. So that's also going to put a bit of pressure on the system. And I think the other thing to note here is that currently we have about 9 forms that get reported or lodged with APRA every year. There's 4 that are audited. Some of the quarterly ones are a real challenge to get in on time within the time frame, which is about 28 days right now, of the quarter end. So you can imagine with the much higher number of forms in the future to get in on time, there's quite a lot more challenge to get it in the time frame required. So what are the high-level requirements of trustees? I think APRA will require, well, I'm pretty sure APRA will require trustees to sign off on the APRA return forms, and that will be to ensure the sign-off will basically say something along the lines that the information in the forms is reliable and in accordance with the relevant prudential standards and also the Financial Sector Collection of Data Act. And they will also be required to sign off that they've established and are monitoring internal controls, and that those internal control systems are operating effectively and have operated effectively throughout the year. So that's, I think, what trustees will be required to do each time they lodge the information with APRA. So what should trustees be doing right now, I guess, becomes the question, and I know many of you are doing this as we speak. You are developing and documenting a framework to comply with the new requirements, that is documenting all the policies, processes, procedures, and also the relevant assurances to ensure that we can lodge the information with APRA and can be relied on. There's also a lot of data mapping going on right now, and the custodians and administrator will talk about that in a moment, and you'll get a feel for the sense of detail around that. But there's a lot of information that it comes from a lot of different sources, and so that should be mapped out to make sure that you know exactly where all of the information is coming from in order to make sure it gets into the right spots in the final forms. The other thing that will be required is a number of IT system changes at the custodian level, at the administrator level, also at the fund level. And I know there are a number of service providers talking to both the custodian and administrator right now. So that is something to watch. You'll also have to make sure that you've implemented adequate controls and you understand what assurances are coming from where in order to comply with the requirements. And then, of course, identify any gaps and make sure you try and close them before go live date. Also, I think the other thing that is important is to make sure you do some testing before you do go live. And once you do go live, make sure you monitor it quite closely, certainly during the first few months. In terms of the audit responsibilities, and Louise talked about the external audit responsibilities, what I've listed out here is what I'm expecting having regard to the information that we've provided into APRA as an audit profession, and also having regard to the current audit report that is signed off for some of the ADIs. The first thing I think that will be required is an audit opinion around some of the information that comes straight off accounting systems. So I think that will be able to be, I think the auditors will be able to provide positive audit opinions around that. So I think that will be one part of a multiple-part audit report. The next thing will be a review engagement, or limited assurance as we call it under the audit standards, which I think will be the information that comes off non-accounting system or non-accounting records. And so that will be a slightly lower level of assurance, and then also around the design and effectiveness and of the control systems to produce the information. So I think there'll be a control sign-off as well over that. So then in summary, the key takeaways, obviously make sure you are documenting and developing an overall framework for producing the information so that you can adequately lodge it with APRA, understand the timelines and the crossover period, what is required to be lodged quarterly and annually, and how does that differ with with our current regime, understand the sources of information and where the gaps are, and obviously also the systems that need to be designed to make sure that you do or you are able to produce the information efficiently, and the resource needs, have a look at that. Do your pre and post implementation testing and make sure that you understand where your assurances are coming from, and also what assurances are coming or representations are coming from your custodian, your administrator and your management team. Thank you.
Hi everyone, I'm just going to really take you through a custodian's view of the data standards. What I'd really like to cover today on my agenda is our perspective, what the change is as it relates specifically to investment data, which we obviously typically hold as custodian banks, some of the implementation challenges we have, what fund should ask their custodian, and I'm going to give you a bit of a crystal ball or my bit of a guess or where I think we'll land over the next few years. So from a custodian perspective, this really is a quantum leap. I was chatting to Sean yesterday and we're talking about Rubik's Cubes, and he mentioned to me that it took him 24 seconds to actually figure out the Rubik's Cube. I wasn't as good. It took me about, I think, 40 minutes to do this, and even though I tried to memorize it, I couldn't improve my time. So currently what we do have is probably a set of data standards and APRA returns that look like this. And that takes us probably about, particularly at the year end, 2 to 3 months to possibly produce with about, I think it was 9 forms. And we're now moving to this. So it is really a big leap, a quantum leap in terms of the amount of data and the complexity from a custodian's perspective. So one could actually say that when APRA released the actual data standards, I think it was September last year, that it really snuck up on the industry. Most people were looking at SuperStream, they were looking at My Super licenses, they were looking at ASIC dashboard, and all of a sudden this snuck up on them. So it's interesting that there was a bit of a slow response initially, but I think once people got their teeth sunk their teeth into it, they realised just how complex and large a task this was. So from a custodian bank's perspective, I think my actual first reaction was that the regulators were really pegging the data standards to align them with the insurance and banking sector. And having working for JP Morgan, we already actually complete a APRA return for the bank. They look fairly similar in terms of the concepts, what was on the form. The key difference being, though, that as a bank, you have all your data in-house, whereas for most superannuation funds, the data is scattered with a number of service providers in what we like to call an ecosystem of data providers. So that represented, I guess, an additional challenge in terms of aggregating the data, making sure the data was right before it actually was then lodged with the regulator. So from a custodian's perspective, just to explain to you a little bit about what we have, I guess, now under the current regime, it's really about reporting at the RSC level, reporting some security level information. And what we have seen is a real, I guess, deep dive, a lot more granularity in data about the product now. So the My Super product, the choice products. Now some of the forms are required to look that way and report information at that level. Then we've got now asset class reporting as well, and we're doing a deeper dive into the security level reporting. So let's not kid ourselves, this is a really big task. We're moving, I think, from 900 to 4,000 data items, and we're going deeper into a fund's typical fund of fund structure. And it includes various types of investment data. So I'll give you a snapshot about the type of data on the investment side. I like to classify the data as being basic data and then more qualitative data. So the core data is actually similar to what we report on now. A trial balance type investment subledger, if you want to call it, a movement of funds, P&L balance sheet. It could be some securities, valuations, portfolio valuations. But the new forms have value add, what I like to call value add. Net investment performance, things like asset allocation. So for the first time, we're seeing forms that have, what is the asset allocation of the My Super option or choice option at a point in time versus a strategic asset allocation, and how have they moved from quarter to quarter or from year to year. Not only do we have that, we've got now value add, and the value add, plus involve exposures. So some of the types of things we're now seeing are things like counterparty exposure, exposure to a certain jurisdiction. So yet again, you've got greater level of granularity and different types of data now needing to be reported at various levels. I know we weren't going to talk about look-through, but that obviously adds another layer of complexity. So not only are you looking at exposures of directly held investments, you're now looking at potentially exposures of indirectly held investments through look-through. There also is overlap with things like the standard risk measure. So now you're involving things like risk analytics. The really sexy stuff, trading, what I like to call trading. So things like there are forms around securities lending statistics, things like repurchase agreements. So what you really have now is a lot more data, basic data and more qualitative type data across various levels of a fund-to-fund structure. So what are the sorts of implementation challenges that we have as a result of that? Just going to run through a few of these. So first of all, it has been an evolving set of requirements. So obviously the first lot of forms were launched and requirements in September proposed. We did see as a result of a consultation process another set of forms released, particularly around investments and investment performance in January, but they continue to evolve. Now hopefully we'll get something next week and they'll look probably a little more better and become a little more practical. But it is hard to start building something from a custodian's perspective if they're actually still evolving. There's a lot of debate around classification, so definition, methodology, what should I use, how should I deal with the fact that I'm at AAS 25, reporting at redemption value, whereas the first lot of standards required fair value. Things like reporting on liquidity were very difficult as well. So obviously that is going to be an implementation challenge in terms of classifications and aligning that and promoting consistency across the industry. So timing is a key one, and I think Sean touched on that, both, I guess, from our perspective to implement and then to actually provide the reporting in terms of the time to actually do that. So that's been now reduced to 28 calendar days after quarter end, which is very challenging because that's the day the funds are actually required to submit the return. So the custodian will probably have to obviously provide that large chunk of data, and it's probably approximately, I think, 70%, 75, give or take a bit. And then it needs to get aggregated with other bits of data. And I know Hans will talk about that from a member administrator's perspective. And obviously for year end, you actually have to get it audited, to touch on some of Sean's points. So there are timing issues. One thing to note too is that funds operating models, they're all different. There are no two funds that really look the same. So trying to standardise that and promote consistency and efficiency is actually quite a challenge when you've got operating models that are actually very, very different. And part of that involves, for example, the different treatments of expenses and fees. So you might have accruals, you might have a mixture of actuals and accruals for your fees, for your fund managers, you might have performance-based fees. So from a custodian's perspective, it's trying to really standardise that, understand where they are, to be able to report on them in a consistent manner. The cost is obviously, I think if I had $1 for every time somebody asked me how much is this going to cost, I actually don't know, but it is going to cost a lot to implement because it is a technology-intensive exercise to extract data out of multiple systems, reconcile it, ensure there's data lineage there, and make sure that you can actually provide it to your clients. Now, whether that's clients that would like the data to be plugged into a data aggregator or whether they'd like to see it in the actual forms. There are various permutations of that. So it is a very intensive and people-heavy exercise. So to give you an example, at JP Morgan, we probably have about 45 people who are just looking at, that's like portfolio project managers, operations specialists, IT, currently looking at this and building this out, and that excludes some of the other stakeholders. So I think I touched on the granularity of data. I won't talk too much about that, but that's all about the look-through, which is really then adding another layer of complexity when you're talking about looking through unlisted products. So whilst I think some of the technology is there already for some of the custodians, and definitely from our perspective it is, it's about reconciling, it's about making sure there are no data integrity issues as well. Things like dealing with historical data gaps, so the 10-year MySuper performance history that's required for many funds who have particularly rebadged their options to a MySuper option. If they've gone through fund consolidations, mergers, that is actually very difficult if you don't have the full book of history to be able to calculate that performance history. In short, reporting on a commingled fund structure is actually not that easy, but it can be done. It's just going to take some time to do it. And the key in terms of in our mind when we are designing this new data delivery is about consistency, promoting consistency across the industry, and making sure it's efficient. So, what should you be asking us? Some of the questions I thought if I was an RSC and I'd want to know what my custodian was doing, these are sorts of questions that I would be asking. I would want to know what sort of investment data can you provide on each form? So I know we've spent a lot of time analysing the forms and actually identifying exactly what data points we can provide, and in some instances what maybe prerequisites we have to make sure we can provide that specific data point. So what format will it arrive? That's really important. Who's going to be your data aggregator, and how do you want to receive the data? What time of the month, post quarter end or year end, will I receive the investment information? Again, very important to make sure you've allowed enough time for it to be consolidated. How will I know what number goes into what box? Again, I think data dictionaries are going to become very important to be able to identify what number belongs in what box and what it actually represents to ensure that you're okay with that number being in that box. Will it be reconciled and auditable? To touch on Sean's point, it's going to be very important to understand where that data comes from. So data lineage is going to be very key to this and making sure that it is reconciled and it is accurate. Can you perform a look-through? I think, some of the custodians will lag in terms of their technology with look-through. And so other things are, for example, what do I need to ask my investment manager, particularly when they have unlisted products, to provide my custodian to enable look-through? Very important. I've had a number of investment managers contact me and say, well, what should I provide? So there needs to be dialogue with the custodian, with the RSC, to ensure what fund managers you'd like to have the look-through and what format you'd like the data, and to make sure that that data is actually accurate, efficient, and arrives in a timely manner. Last but not least, how much will it cost? And obviously thinking about changing your contractual arrangements to make sure both parties understand what's actually going to be delivered. So key there is a service level agreement as well. So just briefly, a bit of my crystal ball of what I think will happen with the final data standards. Obviously, there's been some movement as of what we heard yesterday from APRA and ASIC. So again, I am expecting a gradual transition period with a phased form-by-form approach, so no surprise there. I do think it might be iterative, over the next sort of year or two or 3 years. I think there'll be continued consultation between the regulators and the representative industry bodies. The regulators do want to get this right. They don't want it to be a huge burden, but at the same time, they do actually want to make sure they access the right data to do their jobs. There might be a scale back, and I have seen, already a bit of rumours about a scale back on the number of forms or level of granularity. For example, APRA's indicated they won't require, countries for international assets. They'll now accept region, which will make it a lot easier. It'll be interesting to see what the response will be once they get the data. I was just trying to calculate in my head, there's 250 plus funds, an average of 4,000 data items or even more. I really do feel sorry for the poor bodies that actually have to review all the data and sort through it. So I do think someone is going to then substantiate whether the data is actually useful, and we may see a change as a result of that. What we do see overseas is a more principles-based approach with respect to this sort of data. So I do expect APRA to consider that, are you acting within the true spirit of the requirement? I'm not expecting them to take a hard line unless you really are trying to hide something or you have an inappropriate structure. And we are seeing a focus from the regulators to promote effective prudential supervision. I think every time I speak to APRA, that's definitely their catchphrase about that. And lastly, but not least, it's really important that you think about that you're true to label. So does the data you're providing, is it aligned with what you're providing to your members? Are your products actually true to label? Thank you.
Before I launch into the administration, from an administration perspective, I thought I'd share with you how we currently prepare APRA returns on behalf of funds. So we source the data from custodian, if the fund has a custodian, which most of them have, from other databases that either we look after directly or indirectly through other service providers. We use very sophisticated methods like spreadsheets and other paper-based reports. We do use Excel 2010, so that's always good news. Then we manually enter it into the D2A portal that APRA manages, so direct to APRA. Now, when I say manually, it's because that's the only way we can submit the data. So there's no data feeds. We produce it in draft form and print it out. We give it to the auditor. They do their review. We give it to the trustee directors. They initial each and every page, and then we submit it. Now, it's a bit of a cumbersome exercise, and currently we do it sort of for 900 data items. So picture this in this new regime. Under the new regime, we are going to about 4,000 data items plus, depending again on how many portfolios we're talking about. And we have to do it faster. So we have to question whether the current method of how we do things, whether we can continue to do that under the new regime, or we have to think differently about this and take a different approach. And I prefer the latter. So some practical challenges that we're dealing with, for instance, sourcing data, it was already mentioned, but some very practical issues here around, funds have post-retirement products. That often sits on different databases. How do you deal with recording transition from MySuper to Choice, or Choice back to MySuper, transition to retirement in terms of post-retirement products? So how do you manage that cohesively as distinct from through disparate sort of databases to which we currently operate those particular products or manage those products? From a MySuper perspective, well, we heard yesterday about 40 funds have received authorisation. There's quite a number of funds still going through the process, so we haven't sort of locked down what that looks like. But I think Ross Jones from APRA was quite clear that if you can't report on this in relation to MySuper, you shouldn't be running a MySuper product. So we have to get this right. And again, this is a timing thing. Are we going to be able to do this in a timely fashion? There's some things we don't record at the moment. It's something very simple about MySuper, but for instance, you have to record whether the member actually made an active choice to have their money in the MySuper option, or whether basically it was done by default. We don't record that information at the moment. And you say, well, it's not that hard. But if you add all these little bits and pieces up, it's actually very complicated. And administrators are a funny lot. We have a saying basically, if you need to report it, you need to record it. It sounded a lot more interesting in Latin in the olden days, but that's what you need to do. You can't simply say, well, let's report it and we'll find it somewhere. You have to be able to record the transaction on whatever system you are transacting on. So it is actually a very significant activity here. In terms of timing of lodgement, the new timetable is basically requires a review of the 30 June process. The reason for that is because, particularly funds that are on crediting rates, it takes quite a long time, particularly to get tax statements on property trusts. So it can take 6 to 8 weeks before you receive that information. Well, that's too late if we are reducing the annual return, lodgement of that by a month. So it can still be done. It doesn't mean you have to go unit pricing. That will be a different session. But basically, you have to change the process. And again, you can't just outsource this. The trustee needs to review this and needs to coordinate this because there are so many different stakeholders involved in the process. So then we talk about new data items. So from 900 or so to 4,000 plus, a number of data items currently don't exist, not the way APRA is asking for it. So you have to actually construct it. Then you need to store it, right? And then you need to basically keep recalling it, not only just for that return, but going forward as well. So you need to have a framework, a principle-based framework around this as to how you're going to deal with data going forward. Timing of system changes and reporting dates. It's a simple thing, but if we have to start reporting on a quarterly basis, you think, well, you have until the end of that quarter. But that's not the case because you need to start, if you need to identify a transaction, you have to start doing it from the start of that quarter. So, again, the administrator and the systems to put these things in place is quite complicated and it does need some lead time to be able to make the changes. When we look after about 9 funds, and we have, the clients have different arrangements with different service providers. So for some, it's very detailed data that we receive. Others, it's not, and we have to source it, through other means. The issue here, of course, as well, is we deal with multiple custodians. So we deal with JP Morgan, and we've actually run a pilot at the moment with one of our clients, which actually is very helpful because, again, you get an idea about who actually has that data, where can we find it, where can we create it, where do we store it, how are we going to receive it, and by when. So it's about roles and responsibilities where multiple stakeholders and service providers are involved in this. SuperStream commences on 1 July. Well, it's one of the most significant changes that we have seen in the administration area. So we are a little bit busy, like all of us here, but this is just another thing, I suppose, on top of that. So I think, as an industry as a whole, we are, it's pretty tough to get all these things done in time. I think APRA actually has been really good in the consultation process. They've really listened. We had a couple of sessions with them with a number of administrators where we shared some thoughts and ideas about this. And as I was saying, there's some initiatives going on as well next to that in terms of getting multiple service providers together and the client so that we can have a better understanding about roles and responsibilities going forward. The last point there, interaction with PPG, it's actually draft PPG 235, managing data risk. It's one of those areas where, we deal with about 6 million plus accounts, and so you can imagine the number of data items that we hold on behalf, as a custodian, I suppose, on behalf of our funds. And the issue is that APRA, I suppose, has identified data as a significant risk, and it wants funds to have a data governance framework, to put in place to actually deal with that risk better than today. But it's very much also linked to the work around APRA reporting. Now, the issue on SBR, there's standard business reporting. That's a government initiative to deal with data and reporting from business to government, B2G. It's actually a really good initiative. It should cut red tape. It reduces the cost to businesses, including super funds, which is a bit ironic given that we're talking about the increase in activity we're doing now. But the issue is they actually have what they call a taxonomy, which is a data dictionary, and has very clear labels and descriptions of what it means. Now, when you go through the APRA reporting, some things are pretty clear cut, but there are other bits where you actually need to, I suppose, interpret how you're going to apply that to your fund. And if this is about transparency and comparability, we just want to make sure that everyone does the same thing, otherwise it defeats the purpose. So I noticed that APRA is actually releasing its taxonomy in July, sort of onwards. So what you should be doing, the things that haven't been mentioned necessarily here in terms of gap analysis, the what, the who, the when, and the how. So again, get your service providers in the room. There's some insurance data now as well that has to be provided. Get them in the room as a trustee or as a fund as a fund and basically work out who holds that data, what does it look like, when do I need it? So, for instance, the auditor can actually check that properly, and then the issue of how will you provide it to us, right? And then the extra question is how much. In terms of, investigate the commercial reporting solutions and standards, the world is changing around us, even around Superstream. You know, for instance, we use a reporting language called XBRL. That's the same. APRA is also committed to the SBR project, which also is XBRL language. So there is alignment with other parts in the super system, basically. So it's worthwhile looking beyond just the area of reporting only. And lastly, a trial run. Make sure you do your trial run before you actually have to start reporting. So let's turn this sort of on its head. Rather than saying this is a compliance issue and how will I meet that, let's assume that compliance is a given. And let's assume that how can we turn this data, so 4,000 plus data items, how can we turn this data into information? How can we turn it into knowledge? How can we basically end up with making better decisions faster? And when you take that approach, I mean, you have to do the work anyway. It's very interesting how you can find different audiences that actually probably would find this information very helpful, like your boards, like your, your various committees, how they can actually make better decisions faster. That's, for instance, the approach that Super Partners is taking. At the same time, though, we, of course, have to comply with 1 July like everyone else. That's for those who don't like to read words. In short, this is big, and it's getting bigger. And we can't continue to do the things we're doing at the moment. We have to find new ways. So trustees really, trustee officers really need to show an interest in this and have a coordinating role in sorting out roles and responsibilities to ensure that we can deliver on this. And lastly, look at the opportunity here. Opportunity rather than a compliance burden, and this might actually end up to be a very positive outcome also for funds. Thank you.